Good morning, traders. Hope you had a great weekend. We're going to get started here in just a minute, so hang on just a minute. We'll get started. All right. Can everybody hear me okay? If you can hear me okay, just type a yes or a Y in your Facebook or YouTube comments. If you could, just want to make sure sound is good. I think we are. All right. So I hope everybody had a great weekend. Look forward to a great week of trading. If you're not already following us on Facebook, YouTube, and Twitter, make sure you do. This is where this is the platform that we're going to use to make a lot of announcements. We've got a lot of cool stuff in the works coming your way from Navigation Trading, so stay tuned for that. It's all stuff that is going to make your life easier as a trader and hopefully more profitable. So remember, with this trade of the week and this Navigation Trading Live that we do every Monday morning, it's really all about you. So if you have any specific questions or comments or topics that you want us to cover, make sure you leave them in the comments here on Facebook or YouTube, or shoot us an email, info@navigationtrading.com, and let me know what topics do you want me to cover. Do you want me to cover specific trade setups or walk through different trading strategies? Would you like to see more information on trade adjustments? We've got a couple new courses coming out here in the next couple months. One is more of a directional strategies course. So, a lot of the courses now are really focused on income trading, on delta neutral strategies. And one of the new courses coming out is going to be all on directional trading. So it's okay to have a directional assumption on the market, as long as you're keeping your portfolio in check and keeping your portfolio in balance and not getting too directional overall in one way or another. So do you want me to cover the different directional strategies? Do you want me to cover earnings announcements for stocks? This is something that I think there's a little bit of confusion around as far as how to trade them. We've got a course coming out here in a couple months all about trading around earnings announcements. So really excited about that. But I can start covering some of the concepts here on the live trading. So any topic that you want me to start covering, leave it in the comments here, and we'll try to get to that. Other topics might be options on futures. How many of you are permissioned to trade futures in your account? They are awesome trading vehicles. So if you're not permissioned and you can be, I think most brokers you've got to have at least $5,000 in your account to trade futures. But if you do, you absolutely should get that permissioning. Some of the leverage and the buying power reduction on futures is much less than it is on stocks and indices. So I can cover a little bit more detail on options on futures if that's a topic that is of interest. But let me know. If you don't let me know, I won't know what you guys are thinking. I don't know what you guys want to hear. So let me know. So one other topic I wanted to cover just before we get into the platform, and we've got a couple minutes before the market opens. So one is I make the comment here: trading is boring. Okay, and it should be. Okay, I think a lot of us get into the trading world because it sounds really cool. You see all these Wall Street movies, old time Wall Street movies, where people are yelling and throwing tickets around and going crazy. And the reality is that's not trading. Okay, that's not trading today. If you're a successful trader today, then trading is very methodical, very strategic, and very boring. And I think what happens a lot of times, especially in periods of low implied volatility like we're in right now, is that sometimes you get bored and so you do things that you know you shouldn't. You trade too big. You start putting on a bunch of positions or put on too many contracts on specific positions. And what happens is when this volatility turns around, and it will at some point, when it goes and it starts to spike, and we have a potentially prolonged period of high implied volatility, if you're too big now, you're going to get hurt. Okay, so don't get too big just because you're bored. Okay. The other thing is don't overtrade. Don't have on too many positions when implied volatility is low like this. We want to keep our position size very small. There's the market open. Still love the sound of that bell every Monday morning. Every morning, actually. But don't trade too big and don't overtrade. Don't put too many positions on. Don't trade just to trade. Okay? Wait for your pitch. Be selective. Take good strategy trades and don't overtrade. The last point I make here is those who can grind through the boring periods like we're in now will profit the most when IV spikes, because you want to have that dry powder. You want to have that cash sitting in your account so that when the implied volatility does spike, you're going to have that money on the sidelines ready to pounce on these opportunities. Okay, so just keep that in mind. It's kind of a little tip for the week. All right, let's jump onto the platform and take a look at the markets and see what's going on. So the markets are slightly up. All the S&P 500, Dow, NASDAQ, Russell, all up slightly. Let's see. The bonds are sharply unchanged. Notes just a little bit higher. TLT, which is the bond ETF, just slightly down a little bit. You can see implied volatility is starting to pop up in there. If we look at SPY, what's interesting here is that we saw a tiny down day on Friday, and now we're relatively flat to up a little bit. But look what's happening to implied volatility. It's coming up. You know what that means? That means that there is nervousness in the market. Okay, and when I say nervousness, I mean nervousness to the downside, meaning traders are a little bit getting nervous about this market. If we see just a tiny down move in the market today, you're going to see implied volatility spike. Okay, and that just shows the kind of the uncertainty in the market, and the market doesn't like uncertainty. Uncertainty typically means the market's going to go down. Now, that's not always the case. Look what happened in the election. There's a lot of uncertainty around the election, and it just continued to rip higher. So that's kind of it's a rule of thumb, but you've still got to watch the market, watch what it does, because it will always come back and surprise you from time to time. The VIX, so the volatility index, which tracks the volatility of the S&P 500, it's up over 3% today. The futures are pretty flat. But the VIX is up over 3% today, and the market's up. It's small, and now it's turning down. So, watch that VIX, watch that volatility. That's gonna help us figure out, what strategies to use. Obviously, we use the indicator from NavigationTrading, so we've got that on our side as well. Oil flat, gold fairly flat, silver pretty flat to down. Natural gas is down 1.5%. So look at the futures there. That'll help our position. We've got a nat gas position on that need a little bit of a down move on, so that's good. Soybeans up a little bit. We've got a soybeans position on. That'll help us. Corn up over 1%. That's great. Wheat up over 1%. That's great. That'll help our wheat position. The euro is down a little bit. We've got an FXE position on. Implied volatility is spiking higher here in FXE. So we've got a position on there. If you don't have one, that would be a good candidate to sell some premium in this week, today. Some of these others, emerging markets up a little bit. EFA, which is another international index, starting to get a little bit of a creep up in implied volatility in EFA. EWZ, pretty flat. Up almost 1%. Apple pretty flat. Facebook pretty flat. Netflix down 0.4%. Google up 0.75%. Tesla up over 2.5%. Nice move up in Tesla. Don't have anything on in there at this point. Costco up 0.25%. Amazon flat. Starbucks down a little bit. IBM down a little bit. Baidu up almost 1.5%. So pretty flat across the board. Nothing too crazy going on. So for the trade of the week, I am going to put on a trade this is on a stock that's not on our watch list. It's a brand new stock. It's on Snap, and this is Snapchat. Okay, so I wanted to go over this for a couple of reasons. One, I look at it as a good trading opportunity, number one. But two, it's kind of a different situation that we don't see every day. So this IPO'd back on March 2nd, so a little over a month ago. And you see it spiked up, fell down, and just has been kind of trading in a little bit of a range since then. So what you don't see down here is you don't see the implied volatility indicator. So we don't know really, where the IV is compared to itself because it hasn't been in business for even a year, right? This measures IV against itself over the past 12 months. So that doesn't exist here. So how do we know if implied volatility is high or low? Well, I'll just tell you this. Only being in business for a month, implied volatility is extremely high in Snapchat. And the reason is because there's a lot of uncertainty, right? Nobody really knows exactly where this thing is going to go. Is it going to explode higher? Is it going to fall off? Nobody really knows, right? So that creates high implied volatility, which in our case creates opportunity. So the trade that I'm going to look at for Snapchat, if we go to the trade tab, is I'm going to look at a straddle. Okay, this is a very low price stock. It's only $22, $22.82. So we would use the 23 strike. So if we simply right click, sell, straddle, then I'm going to analyze this. And so what I wanted to point out here is look how wide we're getting. So the price is currently around 23. Our break evens are all the way down here around 18.5 on the downside, and up here around 27.5 on the upside. Okay, so we can't really compare IV to itself in Snapchat, but let's just take a look at another 20 kind of similarly priced stock. One that I found this morning just as a comparison is XLF, which is the financial sector ETF. Okay, trading at a little over $23. So I just wanted to compare it with something that's trading around the same price. So if we look at the trade tab in XLF, same option cycle with 46 days left to expiration. You can see the expected range or the expected move is plus or minus about $1.28. Okay, implied volatility is 18.8%. Okay, so that's the expected move in the IV in XLF. Now take a look at Snap. We've got an implied volatility of over 69% and an expected move of 4.6. Okay, so that tells you right there how much crazier the implied volatility, how much higher the implied volatility is in Snapchat. Not to mention, look at the credit that we're receiving. Okay, in Snapchat, we're receiving a credit of $4.40 on this straddle. If we look at XLF, I brought one in here as well. You'd receive $1.16. Okay, so meaning your max profit is $116 versus Snapchat over about $440. So this is a candidate that you want to stay very, very small on this trade. So don't go crazy here. But this is something I think there's a good risk to reward for. And remember, on these straddles, we're looking to manage them at about 20, 25, 30% of that collected credit. So, we can take this off for about $100, $100, $120, somewhere in that range, depending on how quickly we get there. So that is your trade of the week. Hope that was helpful. If you guys have any questions or comments, leave them in the comments down below on YouTube or Facebook, or send us an email. And for future topics, don't forget, leave those here on the on Facebook or YouTube, and we'll try to make sure and cover those in future Navigation Trading live broadcasts. Everybody have a great week. Talk to you soon.